Good morning, everyone. Welcome to our Monday morning trading session, effectively the last trading week of the year. All right, we got the screen share going on. I see a couple new names in the room this morning. Welcome. What you're looking at here is the diversified trading system, and I'll just let you know how I have mine set up. I've got the Hawk Scalper here in the top left, Falcon Swing Trader top right, Eagle Trend Trader bottom left, and the Raptor here on the bottom right. The charts I'm following on this monitor are the NASDAQ. I've also got soybeans and crude oil up, but please don't be shy about requesting a market if there's something you would like to see. All right, a little bit of a soft start to the week. You can see this is where the market left off on Friday after a rather steady decline toward certainly toward the latter half of the day, but even throughout most of the day, the market was in a little bit of a downtrend. Closed around the 49.16-17 area and opened just slightly higher. Looks like the teeny tiny gap that was there is insignificant. The market already trading into it. The Geiger counter showing a relatively even distribution of the buying and selling, maybe favoring the sellers ever so slightly through this little portion here. Okay, we're going to get a first micro-macro cross signal here. You know what? What time is it? Oh, we're only a couple minutes into the session. I think I'm going to just hold on here for a moment. We're into the hard edge. The hard edge here on the Eagle as well as on the Raptor. The Falcon trying to produce a trend change signal as well. All right. I might get ready for the trend change signal here on the Falcon. I've got currently green dots, so I need to wait for the signal to start printing red dots again. But this is an attempt at a trend change. It does almost look as though the market's going to try to head lower here. Maybe I'll wait for that signal to actually finish printing. Here we go. Okay. Significant support here at this 49.15 area. Wow, what a tug of war. So we're getting some support now here off of this trading band. The first micro macro cross, which occurred right there, has since found its profit objective. And the market's starting to look a little bit stronger already. Let's see whether or not the sellers are able to push the market down from here. But so far, we got ourselves a real tug of war. All right, here they come. If I can get a couple bars in my favor, I'll look at adjusting my stops. Come on. So this has the potential now of becoming a late filter entry signal, which tends to be a high probability signal for us. But the sellers have their work cut out for them as the buyers continuing to hold this 49.12 low. That's going to be the first real obstacle. Okay, the sellers holding their own so far. Come on, get down there. There we go. There we go, come on. Darn it. All right, they're taking a little bit too long here for me. Where's my variable lengths. All right, that's all I'm going to give them right there. If they can't recover from this bar, then I may as well take the stop out. And I just took the stop out. All right, we'll see in a moment whether or not that was a good idea. Let's put that back. And it looks like it was a good idea to take the early stop out because look at that reversal. It's starting to look as though the buyers are getting a little bit stronger now. And we've got ourselves a first micro-macro cross signal. Can I cover it all the way down there? Yes, I can. I'm probably, if we get filled on this at this level, I would consider taking the profit target out and trying to run this trade higher. Okay, so let's delete that, delete that. Just making some notes in my journal here. Come on, get going. So we would have reached our high probability profit target already, as well as our break-even trigger. And I don't know, maybe the way the market's been the last couple of weeks, scalping would be the way to go. probably far enough along I should get my trade at least to a break-even situation. Here we are. And if we can get the market to trade a little bit higher here, I'll roll into a parabolic or perhaps a bar high-low strategy, try to protect more of this open profit. It's a little late rolling that parabolic in. Come on, give me one more swing. Come on. All right, that's all I'll give them right there. No! Oh, wow! Buyers coming out of nowhere! Oh, man! Look at that. Somebody heard my plea. Please don't stop me out, not there. Okay, I'm running with the more aggressive bar high-low strategy now. And I will make that more aggressive still. There we go. I don't want to give up anything here. 34.5. Okay. Oops. Well, that was a decent little run up. Great question here from Natalia. Natalia asks, good morning, Eric. How do you make a decision when to cut losses or move stops to mitigate losses? Or is it purely subjective? Well, Natalia, it's been a little bit of a crazy market this last week, so I've taken the attitude that I'm going to adjust my stops a little bit more aggressively. A lot of times out of the open, we will see immediate market momentum. So for instance here, I think it was, what was the first trade? The Falcon trade. So here is our first Falcon signal on the day. It's only 4 or 5 minutes along into the session. Normally, we see immediate market momentum. It's Monday morning. There's been orders pending overnight. We would anticipate the market to pick a direction and stick to it, at least, for a few minutes, at least enough to find our high probability profit objective. So I set up my trade. Market goes in my favor immediately and then starts to hesitate, starts to reverse. Normally, you will get at least one more chance, or one chance within the trade to adjust your stops. So, in other words, the market is trying to move lower. Somewhere in here, you're going to get at least one chance to see the sellers recommit to selling the market, and that came right here on this red bar. From here, you would anticipate that the sellers would resume the downtrend. And they kept struggling and struggling and struggling. They were unable to resume the downtrend, so I figured, all right, time to bring my stops in, minimize my risk exposure. Because, again, there were a couple factors that should have happened. We should have seen, early in the day, we should have seen some momentum. Secondly, we have this recommitment to the downtrend and no follow through. So that kind of gave me the feeling that, all right, it's probably advisable to bring my stops in. If the market reverses from here, it's probably going to head the other direction, which is exactly what happened. You can do this for yourself as well. And this is a great exercise, by the way, when you're paper trading. Just roll back anywhere in your chart. In fact, here, let's do it like this so you don't think that I'm cheating. Okay, so let's say we take a look at taking this signal. Where would you place your stop? Well, ideally, your stop should go up here. As uncomfortable as that is. Here, we'll go to manual mode. So we've got a stop way up there. We're going to ignore the profit objective for a moment. So now the buyers are moving back against the market. See right here? This is our opportunity to start doing something with our stops. Now you may not choose to roll it right in above that high, but at the very least you can roll your stop in above here. So whereas you had almost $600 in initial risk, now because you've seen the sellers recommit to the market, you have a chance to reduce your risk to maybe, I don't know, $100, maybe $150 at the most. If the sellers resume the trend from here, then that's great. You can just keep rolling your stops down. However, if the sellers reverse at this point, well, you don't want to hang on for the full $600 stop out, obviously. So let's see what happens. Now notice what happened here. The sellers came in, the buyers came in, the sellers came right back again. So at this point, I would probably consider taking my stop down to here, or if I was really anxious on the trade, I would bring it into a break-even situation. But even at here, you've got maybe $25 at risk, not a lot of money. At this point, you're certainly low enough that now you can press the trade a little bit, and you can at least bring your trade into break-even. So it's a little bit subjective depending on how the market is unfolding, but we're also trying to give the trade an opportunity to get to its profit objectives. And it's also a little bit of personal tolerance as well. You know, if you can't stand to have the open risk, then you're going to be more aggressive with your stops. But a word of warning, as many of you have seen me do in the trading room here, if one of my weaknesses, I shouldn't say if I have a weakness, one of my weaknesses is my ability to tweak myself out of a perfectly good trade by getting a little bit anxious with my stops. See, even here on this hawk trade, I had the open profit. I got a little bit tight with my stops. I got stopped out, and the market ends up going another $100 higher without me. Had I been a little bit more patient with my stop, maybe left it here at break even, I could have a little bit more open profit. But that's the thing of trading too. You know, I can tell you the textbook version, but really at the end of the day, it's going to boil down to what you are most comfortable with. But I do encourage you to start with a more liberal stop and then look for an opportunity to adjust it as the trade shows you it's time to adjust. Don't just adjust for no good reason. And yes, I know that is easier said than done. I know that. All right, so we saw a little bit of a rally here out of the open. This would have been, again, the first eagle signal on the day. First eagle signal right here coming off of the hard edge. That, Natalia, that was the other reason as well. I knew we were trading into the hard edge on the eagle band. That was the other reason I got a little bit quicker with my stops. Thanks, Tony. Tony says, nice trade. Good for you. Yes, every once in a while. Okay, the buyer's slowing somewhat, but still looking reasonably strong at the moment, I suppose. Had a big push higher. Problem, of course, now with the signals that we're getting, like this macro pullback signal, is ideally I need to cover the trade down there, but trade manager says nope, fat chance of that. So alternatively, if I really wanted to take the trade, I should probably risk it at least halfway through the range in case the market tries to do a little bit of a retrace here. Yes, definitely. Christian says, good morning, Eric. Does it help to drink more coffee to set my stop faster in the right direction? Yes, that helps too. Definitely. Well, we're fairly balanced here at the moment. Again, the bar is taking a little bit of time to print. We might see a little bit of a pullback here. In fact, I would favor a pullback, I think. Okay, good question. Mark's asking here on the Eagle, where I pointed out this green bar buy signal off the hard edge. Mark says, I'm actually showing a red bar buy at the same point. Would there be a reason for that? Well, are you set on a default 24/5 for your session template? That's usually the first culprit. Sometimes if you're running default 24/7, you get a little extra data, and that's enough to color the bars slightly differently. I've also got a whack of data loaded here. I don't need 50 days. I don't know why I've got 50 days of data in there, but it shouldn't matter. The last reason is that, well, I'm using continuum data. If you're using a different data provider, sometimes we only need to be out a few nanoseconds in our data feed, and mine will print slightly different than yours because the mean Renko bars are essentially a range style bar. And it does depend when they start to collect their data. And if you're off by a few fractions of a second, sometimes that's going to make a difference. Now, that's not to say one is better than the other, and that's not to say that your signal will not be accurate just because yours printed red and mine printed green. Of course, the red bar by a strong signal on the Eagle anyway. But yes, don't fret too much if our lines and signals don't match up 100% perfectly. I get people asking all the time, hey, Eric, I've got, my support and resistance suite lines, my numbers are slightly different than yours. Again, not to worry too much about that. All right, speaking of the support and resistance lines, we've got another buying opportunity here. I don't know. Oh, darn it. That's going to be out of reach. Okay, let's try it like this. Oh, below that one. Do I want to do that? So we're stuck here on the resistance line at the 42, pardon me, 49, 42, 3/4 area. All right, let's see if we get some follow through on that. Signal's coming fast today. So another buy on the Falcon. I'm just hoping my stop is far enough away to make this one work. Because really the best stop should be way down here below the swing low at 49.10. Yes, I know. It's a long ways away. Come on, buyers. Where'd you go? There you go. Mark says I switched the data series to 24/5 and now the charts are in sync with mine. There's really not that much difference between default 24/7 and 24/5. There's a few hours Sunday morning, Globex trading that will sometimes make the bars print ever so slightly different. All right, come on, buyers, where'd you go? So now I'm looking for that opportunity to roll that stop in. See if the buyers are going to hold this little support area through here. No, not yet. Come on. All right, so we're getting a little bit of buying. Come on. No, I'm not liking how they're not getting the bullish follow through that we should be seeing here. Come on. Give me at least one more bar. Oh, you stinkers. Well, the market very balanced here at the moment. Come on. Let's go. Here, we're going to give you a little bit of a push. No, you're going the wrong way. Get up there. Oh, man. Buyers are trying to recover, but not a lot of luck here at the moment. Oh, turned green there for a second. Come on. Here, give you another little nudge. Get up there. Let's go. Come on. Come on. Let's go. Just a little more. Yeah, this again a good example We're long. I'm looking for the buyers to recommit to the uptrend. Ideally, a couple of bars higher would be a good excuse to roll the stops, but the market seems so reluctant that I may roll the stop on the first green bar, and I may not even get that. I may have to roll my stops sooner rather than later. All right, there we go. It's a little cozy. I don't want to have it quite this close, but we're not getting any bullish follow through. This is actually an advantage when you're day trading, is that you can see how the bars unfold. If you're trading end of day charts, because they're static, you can't tell that this bar would have been green for a little while. Well, you can by the wicks here on top. All these bars with wicks, these were green at one time. Same thing, all these bars with tails were red at one time or another. But things not looking so good for the bulls right now. Get up there. I'm just curious. The Geiger counter's probably all over the map here. It is too. A couple big selling spikes. Buyers holding their own. The bias going from deep bear country to a little bit more neutral bias. But it may be too little too late. Looks like the sellers are going to pour it on here in a second. Oh, they're going to tap me here. I'm almost sure of it. Wow, there is a lot of trading going on here around this 49, 36, 37 area. Definitely a number to make a note of. It's probably going to be influential tomorrow as well. Come on, get up there. Oh, thanks, Mark. Mark says the point of control on the NASDAQ is at 49.36.5. Well, that could explain all the activity here as well. Point of control, for those of you unfamiliar with the term, Mark is watching the market profile. And point of control tries to show you the most popular price, and no doubt that is the most popular price right now. Come on. We are so close to pulling this one out of the bag. Come on. It will give you another little nudge with the mouse. I don't want to wreck things here. So come on, we'll just kind of push it up a little bit. There we go. Come on. No, it's the wrong way. Get going. Up this way. Come on. Oh, we're getting a little follow through now. Come on, let's just keep going higher. Some days. Oh, Francisco's asking, where can you see the point of control? Well, uh, you'd have to subscribe to the market profile. It's a usually an extra charge on your data feed. It's, you know, the thing to remember though, especially in the trading world, there are 1,000 different ways to look at the market. And I'm not knocking market profile, Mark. But just because you're looking at market profile does not mean that you will no longer take a losing trade, or that you will automatically make money by following market profile. Just watching how long this bar is taking to unfold, I can tell you, even without market profile, that there is a lot of trading going on here. That's why I mentioned to you, you may want to pay attention to this 49, 35, 36, 37 area tomorrow, because it's obviously a very influential number today. So you can note these things just, you know, by paying attention to what's going on in your chart. Market profile also does the thing where you've no doubt heard of bell curves. If you spent any time in a university class at all, you're familiar with the concept of a bell curve, that 70% of the range occurs between the extremes. That's why they always grade you against everybody else in the class, not just against like on a regular grading system. So if you looked at Friday's trading range from high to low, and you had to guesstimate where 70% of the trading took place, well, I would probably say, and I'm just spitballing here, but I would probably say this would be one barrier, and actually the other one would be fairly high as well. This little leg through here did not account for a whole lot of the trading. So that means what they try to do with market profile is they try to forecast, well, if 70% of Friday's trading took place through here, then that's going to be the most influential area. And you can see I just eyeballed it. I didn't do too bad. I kind of caught the high. I could have brought the low up a little bit. That would have really impressed the heck out of you guys, wouldn't it? The notion is that if the market gets outside this range, it will continue to rally. If it starts outside that range, like let's say it starts down here and then trades within the range, it's going to try to rally to the other side of the range. Now, this, by the way, is all market theory. It doesn't mean it does it all the time, theory being the operative word. But even, like I say, even without market profile, you can still guesstimate just by looking at your chart. So let's go back another day. So here's Thursday's session. All right, it looks like, oh, Thursday was very busy. So it looks like this was the high up here and the low perhaps down there. Yeah, looks like the pre-market low held, and this was the high of the day. So where would you say 70% of the trading range occurred? Well, probably not through here. Probably, again, it'd be a broader range. Sometimes, by the way, it gets very tight. Sometimes you'll see all the trading occur through here, and you'll say, yeah, okay, it looks like 70% of the trading occurred within a relatively tight range. But this one, I would probably say something like that, and wouldn't have been a lot of trading here. It looks like this price zone through here was fairly popular, so maybe something like that. That, I would say, would be the market range. So how did that work the next day? Oh, look at that. We saw it flinch up there. Oh, look at that. We saw it flinch down here and then finally break out and go continue to accelerate. So again, it's not a holy grail by any means. It is a very interesting way to look at the markets. And I'm not knocking it, not by any stretch, but again, just because you know about market profile does not mean you're never going to take a losing trade. Yeah, see here, like Mark says, this is true. I use it to see where the point of control, the value area highs and lows, those are the lines I just drew, where those are, and it helps me decide when to expect possible swings and bounces. And that's exactly it. If you trade through one of those borders, you can expect the market to continue higher or lower. And if it flinches there, then you can probably expect it to reverse and so on and so forth. Mark also says, I primarily use it in combination with my two favorite setups, the first micro macro cross and the late filter entry signals. It helps me make decisions, but like anything else, if it doesn't help make a decision, it's not worth having on the chart. For me, it helps for what it's worth, Mark says. And that's exactly it. That's the bottom line. You can put all kinds of stuff on your chart, but if it doesn't help you make a decision, it's no good to you. Come on, get up there. Consider this as well. When I was doing a little bit more coaching, people would come to me and they would show me their charts, and inevitably their charts would be cluttered with all kinds of indicators as they desperately search for that signal that's going to eliminate the losing trades. And by the way, I'll save you some time, there isn't one. But every time you add a new indicator to your chart, you need to remember you're essentially starting over. You're starting the whole process, the whole learning process over again. And don't get me wrong, I'm not trying to discourage you from looking at something, like market profile or Bollinger Bands or whatever. But just bear in mind that every time you shift gears and you put something else on your chart, you're starting over. There's a whole new learning curve that's going to take place. Oh, come on, we've got a dead sideways market here now. Come on, just get away from this 36 line. I'm not sure I've ever seen the market fall flat quite so quickly. Oh, we may have caught a break here, folks. Come on, get up there. Yeah, see, Mark makes a great comment here. Mark says, I might add that it took me 2 years of studying market profiles to find an edge on how to use it. I use it on a separate chart and just for confirmation comparison purposes because I have 6 monitors and have the space to do it. I too hate cluttered charts. And again, I'm not discouraging anybody from learning about market profile. It's a very interesting way to look at the market. Like I said, too, you can eyeball a lot of stuff. You can see where most of the trading has been occurring. We're trying. Oh my gosh, we're trying. I'm so tempted to start rolling my stops up, but I think I'm just going to leave them where they are, and hopefully we'll see a breakout above here. Certainly, if we fail at this point now, it's time to go. That's fairly obvious. This would be like a triple top type thing. Come on, get up there. Come on, let's go. If we can get above this line now, this 49.43 area, we should see another, uh, at least short-term leg higher. Not going to say we're going to see a full rally, but I do think the buyers owe us one more, don't you? This big push up, I think they owe us one more. Come on. Here, we'll give you another little nudge. There we go. Come on. Get up there. Oh, come on. Come on. Here we go. Give you a little push. It's a pretty slow morning, except for that first rally. Let's go. Just get you over the tipping point. All right. We got a little bit of traction here. Should I bring the stops up to break even yet? Let's see where the parabolics are at. Oh, well, there we go. We hit the break even trigger. And oh, come on. There we go. Come on, get up there. There. Oh, my goodness, that was hard work. Whew. All right. Well, I took profit on target. I didn't want to press my luck, but I think we might see the market press a little bit higher from here. They're just so conflicted. You saw how long that particular trade took to unfold. Yeah, Tony says his trading is hard work. So let's see, that trade went on from, I took it at 7:03. That was a half-hour trade, which is a little bit unusual for us. Our trades don't usually have that kind of duration. Started the position at 7:03 and closed it out at 7:39. Whew, that was tough. But the buyers came through. Oh, and there we go. Yeah, I thought they might press a little bit harder. It does appear as though it is a bull market today, so buying opportunities are the way to go. Look at that spike here that went through the Geiger counter before that disappears, and just look at how it overwhelmed the sellers. The Geiger counter, a great tool in that respect, really gives you an indication of who is in control and which way the market is likely to be leaning. Yeah, if I'd had the courage to hang on to that one, that might have been an interesting trade to see how much higher the market will go. Right now, I think we're still more or less at our high probability profit target. So let's see, we got in at 49.42, 3/4. Yeah, we're still about in that same neighborhood. try to press it up a little bit more. A good opportunity when you have a trailing stop in play as well. If you're able to take multi-contracts, take profit on one, trying to run out the rest. Okay, so we rallied up to the next resistance line here at 49.56. Oh, way to go. Natalia says, I've still got one contract trailing. Way to go. She's using the ATR with the default 2.618 stop. So let's see. Oh, well done, Natalia. And Dan also in. Daniel trailing a 2-bar stop. Nicely done. Yes. Mark says, trading still beats laying blacktop or cement. Yes. It certainly does. Oh, way to go in Francisco. Still long. Way to go, you guys. Nicely done. Okay, they're getting a little bit top heavy though. I think we might see a little bit more of a reaction here. Dan's already up 55 points. Nicely done. All right, well, here comes a little bit more buying pressure. Well, you might be in for a little bit more of a ride still. They're trying hard. They're trying really hard. We could see another push higher here. There's no question we are in a bull trend today. That should be pretty obvious. Oh, or not. Yeah, it's that kind of day, folks, where the market's going to take its time to get around to moving, but when it does move, we can certainly expect a little bit more follow through. No, they're still kind of going sideways here. Just a review while we're waiting for something, anything. We did have some pretty solid signals here this morning. The first micro-macro cross on the hawk. And then that took off. We had a macro pullback and a four-arrow consolidation kind of overlap. Four-arrow consolidation right in here. And that led to the next move higher. Almost looks like we're going to get another four-arrow consolidation. The problem, as before, where in the world are we going to cover this thing? You pretty much got to cover the trade way back down here below that 49.36 area, which we know to be a strong resistance zone or support. The Falcon we've already seen. The Eagle gave us that great signal out of the open, and no looking back from that. And the Raptor, certainly last but not least, we had, well, a double pullback signal right here, just at the end of opening range. So, great signal to capitalize on there. In fact, I wish I had taken it on the Raptor, because I normally take 2 contracts on the Raptor. And that's where we're at right now, just kind of in a holding pattern. Well, we don't have a whole lot going on here at the moment. It does look as though the market might try to pull back just a little bit here. Kind of struggling now with this 49.52 area. All right. Well, I think we're going to button up the trading room here this morning. It was a pretty good day overall. We will be back again tomorrow to do it all over again. So I'll see you guys then. If you are trading this afternoon, I think you should anticipate a little bit of a pullback somewhere through here and perhaps another buying opportunity. I can't see the sellers flipping this market on its head. However, it may end up going in a little bit of a sideways fashion. So try not to be too overly aggressive on your buying. All right. We'll see you Tuesday. Bye for now.